All right, traders, welcome to the post-session review. I didn't do one yesterday. I was really tied up, so I apologize for that. But we do have one today. We'll bring the account current for the transparency standpoint, and we'll also talk about today's price action. It was a challenging day, very choppy, very deep corrections, very range-bound market, as you can see superficially here. But we'll get into that. First, let me bring in the spreadsheet. And we have a $110 gain here, $110 gain, $125 loss yesterday over a few trades. Some back-to-back expectation failures. Story of our lives these days. And nothing, we have a 27, 28, 13, 27, 28, 13 down here. $110 gain today, $110 gain on here. So for the sake of transparency, we are good. And we can go ahead and minimize this and get to the chart. So overall today, the market had been making consistent new structural lows and lower highs. And the market broke expectation here, producing an expectation failure. And then from that point, the market had been consistently making new structural highs and higher lows. The market opened here, and shortly at the open, a few seconds after the open, price came down really nicely into this area. And as we can see, we have a nice little ABCD pattern here that I like to always have from a confluence standpoint. So I got long here, and the market came here, came down, okay. It did make a lower close below the low of the previous candle here. Let me move this so you can see it. This is the tail right here. So if you look across, let me make it fatter for you. I know that some of you guys were saying on your chart you didn't get a lower close. But here I got a clear, not clear, but a close below the tail of that previous candle, and in my rule set, that constitutes a new structural low. Now in reality, if you ask 100 people, is it a retest, is it a new structural low, you'll get mixed messages on that. But nonetheless, it was a new structural low, and it forced my me to implement my rescue mission. Okay, only I didn't follow my rescue mission rules, right? And not only did I not follow the rescue mission rules in this particular case, but I also did not follow my trade management rules and ended up with a break even because of that. Let me explain. Okay, so if I get a new structural low and I have to implement a rescue mission because I had not been stopped out, which was the case here, my rules say that once I have a positive close, I keep trailing on decision candle until I get taken out by price. That would have been somewhere up here. Okay, also price achieved a 1-to-1, which means that I should have been trailing anyway just on that premise alone. I did not, and I'll tell you why. Okay, in my infinite wisdom, okay, I felt that the bulls have regained a lot of ground that they did not need to give back, that they needed to gain back. I also saw an inability of the sellers to defend the areas that they have been clearly defending and capitalizing from, particularly this one right here. There was nothing here. Now, I did get to the break even, of course I did, but I didn't keep trailing, and I didn't trail at the 1-to-1 because I felt that although I was likely, would be reasonable to expect a correction from here, I didn't feel like this area was going to be defended by the sellers, and that the buyers would take opportunity there to take price higher into a new structure high. Knowing that the expectation had failed technically, knowing that I had already broken two rules, okay? So I left at a break even. At the very least, I'm glad I protected my trade and followed my rules. However, that's not what I should have done, and I left points on the table because of that. So always follow the rules. So not only did I start off on the bad foot because I would not follow two rules, clear rules that I have in my trade plan, but then I overlooked the fact that price had made a new structural low and I got long here. Okay, now it turns out that overall my assessment of the buyers ended up being correct, and price came back a little lower than I expected. But the rotation got me in, and then when price was somewhere around here, I'm like, oh crap, why did I buy? The expectation is for a new structure low. Okay, so my trade plan says that, you know, when I no longer have any reasons for being in a trade, I need to find a way out of that trade. Okay, so I should have never been in this long. I had no reasons to get long other than a subjective analysis that the buyers were stronger than the sellers, and that price would likely go on to make that new structure high. But that was not a reason. My trade plan did not have me getting long here. So what I did was, when price was up here, I got to a break-even position, okay, and I ended up getting taken out for break-even. Now, it was this tail was covering it up. This tail here took me out by half of a point, and then price went on to make another new structure high. So that was unfortunate, but I did need to protect my trade as I was not in the proper trade here. I messed up here in my entry, and as a result, at least I didn't suffer a negative consequence from that. I was able to unfortunately be taken out by 1 point, but it would have been a profitable trade. Next trade was a proper correction here into a weak new structure high, again close above. So my trade was looking for an entry long, and as we can see, the sellers came in here, buyers came in to absorb. The buyers tried to come in here, the sellers tried to come in, and the buyers came in to absorb. Okay, so once the sellers came in here, and I get this nice little small candle, although there's a little bit of rejection here, it was a nice absorption candle, so I got long, and my stop should have been below this. I gave it a little more room because of this this tail here and this tail here. There were areas that the buyers had absorbed nicely, and been able to capitalize from that absorption area. So I gave it a little extra room, and I got taken out for -15. That put me in the hole for the day. Okay, and then price came down, started making new structure lows, and I had a nice rotation here. It was expensive. I didn't necessarily want to take it, but my risk was manageable, as this was the more immediate order flow that had been playing out. I'm sorry, the intraday order flow that had been playing out was this one. So I got short here, managing it on the 1-to-1, the little ABCDs here, okay, and then I trailed at the completion of the smaller term ABCDs. I'll draw them out for you. We have proper corrections of all these swings. So these are all lines that we can project forward. Okay, so as price started moving forward here, so we can see we had one come in here, we had one come in here. This is where I decided, when I got the rotation here, I decided to trail, and price came back down. Now price did extend past the 1-to-1, okay, and we had the 161A here. We had good structure here. This was a very nice longer term ABCD pattern in an area of exhaustion, so I took the D long, okay, and once price got up here, it was 12:08 already, and I wanted to be done with this trade. I wasn't sure, you know, my goal was to get the trade here, but I started trailing here. I locked in here because it was already 12 o'clock, and I wanted to be done, since I had kind of like, not undisciplined, but you know, I started off on the right foot, then I got, you know, realigned, and then I got stopped out here, you know, which had a little bit of frustration setting in, and now I take the trade that's right, and it ends up failing. But I didn't let that deter me from not trading, but I did get back on track here. But nonetheless, there was a little bit of frustration setting in. The market was very hard to read, was somewhat choppy and rangy. So I got long here, and once price came back up here, I locked in price there, and sure enough, price took me out by another point, and then went on to profit target. So I mean, I wouldn't have gained much more than that. I would have trailed somewhere around here. So I would have been taken out for slightly more, 45. So I would have had, you know, like 10 more points, something like that. Wouldn't have been a major difference. But you know, I didn't post this trade live because I know a lot of you were going to ask about, you know, you're trading against the expectation. And one of the things that I want to let you guys know, and I'm going to say this again, you need to understand what you're trading, okay? And this D entry here is against the shorter term expectation, I mean, or the intraday expectation. But I'm not trading this as a new structure high. I'm trading this as a pattern, which means I'm going to get to a break even and protect at the 38 because I am against the flow of the market, right? So you go to the 38 of the pattern to protect. That usually equates to pretty close or almost the same thing as the 618. Okay, so the 618 of the main swing, it's usually almost the same as the 38% of the pattern, as you just saw. Okay, that's what we protect there. All these things have been thought out of ahead of time so that it does become, you know, there's a method to the process. It's not random. It's not today we do this, tomorrow we do that. They're very clear rules are having very carefully thought out and tested over time. Okay, and that's why we get to a break even when we get to a break even, because we understand that there is likely going to be some sort of a reaction from that point. Because if this order flow was to hold and we get a new structure low, I'm sorry, lower high, that's probably where the sellers are going to engage, and that was the expectation. Okay, but nonetheless, we would have achieved a nice extra 10 points, and this was the point where we get short in line with the overall harmonic expectation of a new structure low. Where was the market likely going to go? All the way down here. In fact, price went way beyond that. But this is the aggressive C entry of the next expected ABC to the downside. Okay, so as you can see, that is why I took the D entry here, because the market was way overextended on the intraday order flow. There was nice harmonic and ratio exhaustion of multiple ABCDs that completed there. We also had very nice buying zone here. So we had all the confluence we needed to say at the very least we should get a decent correction from this, and a decent correction would mean what? A deeper correction, which gives us opportunity to make points and gives us an opportunity to get into a trade and very likely get to that break-even point to protect, just in case the intraday order flow or the general order flow happens to play out sooner than expected. Okay, so overall, when we look at the clear high, clear low, this is another thing I wanted to share with you, that when we look at the clear lows and clear highs, you know, price made it all the way back down here. Okay, and that's another indication that, you know, this market intends to head lower, although it did not close below this. It closed below 1, 2, and almost 3 swings of the general order flow to the downside. So all these things lead us to an expectation that the market as a whole, okay, may be looking to push lower, and it would be reasonable to expect a decent correction from here. Because where did price get? Every time the buyers engage here, where did price get to? You know, somewhere in this general area, right? I want to show you how none of this is coincidental or by chance. Every time the market came up here, look, this is where the sellers started defending, and here. Where did they, from here, where did they go? Here. Where did they start trying to defend? In here. So this is the area that the sellers as a whole, you know, tried to defend as price, as price shot from these areas here and there. That's where they came down. Here, this is where they came down. Well, a little higher there. Here, where did they come down? Here. So this is the area that from this area the sellers were going to likely defend. Let's move over to the right. Hello. Right? This one didn't quite make it there, but as you can see, is there a footprint here from the history? Yes, there is. Let's bring it across. Look, okay, I'm going to leave the horizontal crosshair there. All right, so now if you look across, you see a little some here, a little some here, a little some here, a little some here. You know, these things become relevant as price moves to and from areas of structure. Okay, and what held before will likely hold again, or what was defended before will likely be defended again to some extent. Okay, understanding that framework and understanding that tendency of price action gives you an advantage when you're looking for areas of interest and when you're looking for price as a whole to see, okay, what do I expect to hold? What do I expect to fail? What kind of a correction am I expecting? Okay, well, I'm expecting a deeper correction from this. Okay, fantastic. Where would that put price? Well, somewhere in the 618. Okay, the 618 is beautiful, but what do everybody see? Does everybody see the 618, or does everybody see the structure around the 618? In this particular case, you know, there is structure clearly around the 618 looking left, and that is the best area to what? Not only take profit, but to get short, because our market is expected to continue to go down. All right, so, you know, small gain today on the account. We're still within our recovery efforts, but we're not trading to recover. We're trading to grow the account. We're just going to make the recovery quicker. You know, we've been getting a little better with the you know, starting to string some of these winning days a little bit, with an exception of here and there giving some back. But overall, you know, our equity curve. Let's look at our equity curve. Let's see. We made a new structure high here off of a complex correction. Remember, now we have a higher low here, so we expect hopefully to make another new structure high here. We're on our way up from that higher low and looking to break above this line here. That's our structure area. Hopefully we won't test this area. We'll just go through it. We'll have a breakout. That's what we're looking for here on the equity curve. That's what we're going to shoot for, and hopefully we'll achieve that on Monday. So there's not much else. That's all I wanted to share with you guys. A pretty decent day as a whole. A little bit of a rough start here, and then a loss, and then 2 wins. So 5 trades today. Overall, you know, I have to be pleased with how we ended up. That's about it for this session. Stay tuned for a couple of videos that are going to be coming out. Some 2 questions and answers video off of 2 private messages that I got. I got permission from the writers to turn them into Q&A videos because they're very related to what we've been talking about recently with trading state and testing. So that's about it, guys, and I'm going to be also working on those you know, on those 3 pillars. I'm a little bit behind. I'm only one. I have 3 little ones and a life, so, you know, bear with me, be patient. You know, I'm getting to it as best I can. Thank you very much for your time, and looking forward to the live stream next week, Wednesday.